Hey everyone. Welcome back to the Dinar Update channel. Today, we're diving into a topic that's been on the minds of many, Iraq's potential currency revaluation. Specifically, we'll talk about whether Iraq might make the same mistakes Kuwait made over 30 years ago when they redenominated their currency. Could Iraq see a massive spike in the value of their currency? Should we expect a repeat of that $15 in exchange rate? Let's break it down. If you've been following Iraq's economic journey in recent years, you've probably heard people speculating about a massive revaluation of the Iraqi dinar. There's a lot of talk about Iraq potentially coming out at a very high exchange rate, similar to what Kuwait did back in the early 90s. Now, I'm here to tell you why I don't think we'll see that kind of dramatic change. So let's take a look at the lessons learned from Kuwait's experience, and why Iraq is unlikely to repeat that mistake. To understand where Iraq might be headed, we need to look back at Kuwait's history. In 1991, after the Gulf War, Kuwait went through a major revaluation of their currency. The Kuwaiti dinar briefly surged to an incredible $15 and to 1 KWD, an exchange rate that was completely out of line with its historical value. But here's the thing, that incredibly high exchange rate didn't last long. In just a week, the rate dropped back down to around 3-1. Why? Well, as it turns out, it was a situation where the big financial players, the so-called whales and sharks of the financial world, took advantage of that extreme volatility. They bought into the currency at an artificially high rate, only to turn around and sell it back down at a much lower value. The short-term gain for those financial players was significant, but the long-term damage to Kuwait's economy was severe. The country lost the stability it had worked so hard to achieve. Inflation skyrocketed, and there was massive uncertainty about the future value of the dinar. It was a perfect example of how a sudden and extreme currency revaluation can cause more harm than good. So, here's where Iraq stands today. The country has been working tirelessly to rebuild its economy, stabilize its currency, and bring about economic reforms. They've spent years moving towards a more secure financial system. But, despite this progress, Iraq knows that a high revaluation at this point in time would destroy everything they've worked so hard for. Iraq has been carefully implementing reforms in its economy, banking system, and the broader financial structure. The country has been working to improve infrastructure, attract foreign investment, and create a more stable environment for economic growth. A sudden spike in the value of the dinar would undo all of these efforts. Not to mention, it would likely lead to skyrocketing inflation. Let's talk about inflation for a second. If Iraq were to suddenly revalue the dinar too dramatically, let's say to that $15 and to 1 exchange rate, we could see a huge rise in the cost of goods and services. The price of everything from food to fuel could explode. For everyday Iraqis, this would be devastating. The purchasing power would drop, and the economy could spiral into chaos. Inflation would likely spiral out of control, eroding any potential benefits from the currency revaluation. And that's not all. If the country does not carefully manage the currency's value, Iraq could risk a major destabilization of its economy. Foreign investors might pull out, and the confidence that Iraq has worked so hard to build would be shattered. So, you might be wondering, what does this mean for the Iraqi dinar going forward? Will Iraq simply stick with the current low value? Will they revalue their currency at all? The short answer is, Iraq will most likely take a very careful approach, one that's measured and gradual. They won't jump straight to an unrealistic exchange rate. What we'll likely see is an exchange rate that aligns more closely with what we're seeing in other Middle Eastern countries. Rates in the region tend to hover around 3-1 against the dollar. This rate is much more stable and in line with Iraq's economic position. It's high enough to reflect the country's improving financial situation, but low enough to maintain stability and avoid chaos. This is an important point. Iraq is already surrounded by some of the most powerful economies in the world, and they know that being part of that group means they have to maintain a stable currency. A moderate exchange rate will help them continue with the gradual improvements they've made without risking their hard-earned progress. When you look at Iraq's currency, the goal isn't to have a huge spike like what we saw with Kuwait. Instead, the aim is to maintain a stable value that reflects Iraq's improving economic fundamentals. The goal is to avoid the kind of extreme volatility that could damage their economy. Iraq doesn't want to go the route of a quick gain followed by a crash. At the end of the day, Iraq has learned valuable lessons from the past, particularly from Kuwait's experience. They understand that a high revaluation could be too risky, both for their people and for the broader economy. They know that they must focus on creating a stable, sustainable currency system that will allow for long-term growth. It's all about finding that balance, Iraq is on the path to rebuilding, and the focus will be on stability, gradual growth, and creating a currency that reflects their newfound economic strength. It may not be the big bang many are hoping for, but it will be a smarter, more sustainable approach. Thanks so much for watching today's video. What do you think? Will Iraq stick to a moderate rate, or is there still hope for a sudden revaluation? Let me know your thoughts in the comments below. If you enjoyed the video, don't forget to like, subscribe, and click that notification bell so you never miss out on our future updates. See you next time.